Hello everyone, my name is Vapi Napatasari. In this video, I will explain material about the tax collection system, types of taxes, tax rates, tax functions. 1. The tax collection system. The tax collection system is the way the government collects funds from the public to finance various public programs and services. In this system, the government implements policies that regulate who must pay taxes, how much tax must be paid, and how to pay it. The goal is to ensure that the funds collected can be used for development and public services effectively. Main components of the tax collection system: tax authority, the institution responsible for collecting taxes, such as the Directorate General of Taxes in Indonesia. Taxpayers, individuals or companies who are required to pay taxes. Collection instruments, methods or means used to facilitate tax payments, such as online systems, direct deductions, or manual reporting. Tax regulations, rules that explain the provisions for tax collection. Sanctions for non-compliance, and incentives for compliant taxpayers. 2. Types of taxes. Types of taxes can be classified based on who is taxed, the purpose, and the method of collection, based on tax object, income tax, PPH tax imposed on the income of individuals or companies. Value-added tax, VAT tax imposed on goods and services sold or consumed domestically. Land and building tax, PBB tax on ownership of land and buildings. Based on nature, direct tax, tax paid directly by taxpayers to the government, such as income tax. Indirect tax, tax passed on from consumers through producers or sellers, such as VAT. Based on government level, central tax, tax managed by the central government, such as income tax and VAT. Regional tax, tax collected by local governments to finance local government operations, such as motor vehicle tax. 3. Tax rates. Tax rates are percentages used to determine the amount of tax to be paid. Tax rates can vary depending on the type of tax and the category of taxpayer. Flat rate, the tax rate remains the same for all taxpayers, for example 10% for VAT. Progressive rate, a tax rate that increases with the increase in the amount of income or the value of the taxable object. Example, income tax in Indonesia, which is progressive based on income groups. Regressive rate, a tax rate that decreases with increasing income. This is usually rarely used in tax policy, but is often found in indirect taxes. Proportional rate, the same rate is applied to each income level, but the tax collection results vary depending on the size of the income. 4. Tax functions. Tax has several important functions in the economy and government. Budgetary function, taxes are the main source of government revenue to finance state expenditures such as infrastructure development, health, education, security, and others. Income redistribution function, taxes are used as a tool to redistribute income from the rich to the less fortunate through subsidies or social assistance. Programs. Regulatory function, the government can use taxes to regulate people's economic behavior. For example, high taxes on cigarettes to reduce consumption of tobacco products. Stabilization function, taxes can be used to stabilize the economy, especially in dealing with inflation or deflation. By regulating the amount of taxes, the government can control the amount of money circulating in the community. Conclusion: the tax system is a vital element in a country's economy because it supports state financing and regulates economic activity. The types, rates, and functions of taxes are designed to be fair and effective and help create long-term economic stability. Functions in the country's economy, including 1. Budget function. Taxes are the main source of state income which are used to finance government expenditure, such as infrastructure development, education, health, etc. 2. Regulatory function. Regulation taxes can be used as a tool to regulate economic policy. For example, the government can increase taxes on imported goods to protect domestic industry or reduce taxes on environmentally friendly goods to support environmental conservation. 3. Equalization function. Income redistribution taxes function to distribute income to society more evenly through social assistance and development programs. 4. Stability function. Taxes are used to maintain economic stability, for example in controlling inflation and maintaining economic balance.